The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And we're coming up on the Christmas 2 or 3 day stretch here, and you guys should be trading lighter. This market my God, the elevation on the S&Ps was relatively dramatic. Not a ton of volume there, but, God, we could hold true to the drift up towards the end of the, trend up scene here. It's a lot of volatility. I don't have to tell you guys that. I think we had 7 straight days of 100-point down moves in a row. It's quite amazing. We're going to go into our index section here really, really quick and just kind of graze on the scanner through the global situation on the weekly. There's the weekly. Here's the daily. Here's the 4-hour. And here's the 1 hour. So as we go down in the lower term time frames, we had some global indices start to turn relative to profiles. And, what does that mean? I'm going to go back to the S&P charts in just a second to really answer that question fully. But as we go down to the S&Ps, I'm just going to drill down these, the 60-minute yesterday just completely took off. I don't have to tell you guys that. Here's the 23rd. Here's the 21st. We had that crossover happen again on the 21st. And, we haven't looked back since then. So let's just take a look at some of the levels on the S&P. Let's take a look at crude oil first, though. I was looking at this yesterday. We talked about had a hint, new profile attempting to appear. This was in the scanner. I'm going to go to crude oil really quick in our futures section before we get into some of these index calls. But as we look at crude oil, you look at this, and now you've got some new inflection points to pay attention to. I'm going to go to my landscape section. There we go, 37.62, 35.73. So, guys, for instance, and Dave, we're going to get into this. The gentleman who called yesterday about, he called himself a simpleton. I don't think he should discount himself that far down the line, but talked about, how do you use this information ultimately in the best way? Doing an educational video series. I was waiting for the last piece to go up, which really is getting the historicals properly populated in our charts internally. This new feature that we've got in our latest version of the scanner, which we haven't released because I haven't been exactly bonkers over getting all the information in here yet and happy with it. But you guys this is our gold. I'm just showing all time frames here. This is an example of what's going to be available. And then I want to do the video series without actually having to go away from this product, go back to eSignal back and forth, because the container now is full. And we want to give you guys the, obviously the best upgrades that we can and make sure they're all populated right with the historicals on the server. We basically have created, with the other charting package that we wrote in this one, I think we are full of technology now. So just bear with me. There's a lot of cool things coming out before the end of the year, and I've got time to do everything now over the holidays. So that's what I do. I work for you guys over the holidays. So as we look at this, I'm going to go back to the chart on crude oil here really quick. So, for instance, Dave, we've got this 37.62 sitting up here, and we've also got a previous unfair high at 37.55. So that is something, we're in a defined downtrend. I'm going to go back to the scanner. I'm going to show you something really quick here. WTI crude oil, 29 days down in the latest intermediate move down. Straight days, arrow down. That's what that means. And we're sitting here 7 deep red. Remember, this is also kind of a quick glance situation where we get deeper red on the sells or lighter red relative to how close we are to the bottom of the latest balanced area, and vice versa on the green side. You can see a little bit easier on the green side. But crude oil, we cannot get really dizzy with excitement that this thing is going to change its tone until we break that 3750, 3760 area. All right. And that will be a daily close above, and then hopefully use it as support. But right now, you're still selling resistance. Even though we had a little bit of a pop yesterday, it's a dangerous game to play. And you're going to be looking forward to this thing rising up. I'm not a big fan of taking longs against the long-term trend down on crude oil right now. And I'm hoping we get back up to 37.5, 37.60. We kind of turn the wrench the same way all the time on this show. I don't do a lot of contra trading. You know, a lot of people want to kind of be the hero out there. It's a very dangerous game to play and try to pick bottoms and pick tops on their own. We like to get confirmations usually on this show. It's a little bit safer way to go. And if the trend is showing itself, we usually try to sell, for instance, on a downtrend and find opportunities to do that, and vice versa on the upside. So that's the situation there. Let's take a look at the S&Ps really quick. This has been something that's just really been hard to trade for me lately. I'll put it that way. If you guys watch this show, you know the transgression of events as they've happened. We talked about 1993, 94, being able to pick a battle there. I didn't think we were going to rally this hard past, and I was actually ready to sell this thing around 2023 to 2025. That didn't work right. So I've actually had a pretty low, personally, percentage correctness on some of my trades. But we talk about this all the time with the S&Ps. We talk about spreading the risk out, being in many products if you can, if your account size is big enough, and also being able to play the risk-reward mathematical game with the percentage being correct. And this has been something where I've had about a 30% correct rate on this the past couple of weeks, and that's been the way it goes sometimes. Next stop up is going to be 57, 2057, but what do you do with it today? That's the top of our profile as we had kind of sunk down below before. We did that key reversal off of 2057. I was thinking we were going to spin around up there and possibly head higher and drift higher towards the end of the year, but that reversed, and then we had to kind of follow our breath situation as we got below 2025. And major inflection point at 94, we had to seriously pay attention to and try to pick a battle there against the long-term trend, or against that move down. I mean, those are areas where you wait patiently. So, and if you watch this show enough, I'm a big fan of trading off of longer-term inflection points. There are incredible opportunities just using the scanner. Going back to my, where's my S&Ps in here? Okay, there we go. There's incredible opportunities just trading off the short-term profiles and using this kind of sell structure, if you will, along with trading our breadth on our S&Ps in general. So 60-minute crossovers on the short-term trading have to really pay attention to that. And what I'm doing on the long-term is I usually try to block out one side of the marketplace on the long-term. It's been a little bit of a harrowing experience. We've had a pretty massive middle ground lately. This is our daily, and we've got 53% of the stocks in the S&P on our daily profiles are trading within profiles here, and that means that we're going. We basically are getting back into, and we're actually increasing that middle ground relative to the last crossover that we had on the downside. So, what does all that mean? That means that the market is becoming extremely balanced again. Believe it or not, we've got very wide profiles for a lot of stocks, and extreme non-direction. So, there hasn't, and we've talked about this. There hasn't been, even though you back up and you look at the weekly and you look at the daily. I mean, we basically have traveled the entire fair auction in a matter of less than 48 hours the other day, 57 down into 94, and then we're just kind of floating around here. So we're in the upper part of the balanced area and the intermediate. You literally have to be looking more than likely at this stage at 2025, 2023 as support on this. Do we have to explore the entire fair auction up again? No, we don't. But, you don't at this point in time and price point right now, you don't have a ton of leverage on long-term inflection points. I'm going to go back to my short-term and see that 2025, I keep talking about that number. That's our POC on a relatively wide profile on our daily and the top of our profile on the 240. So that's going to be something that you can pick a battle on. You've got multi-time frame confluence there. On our 60-minute, no new profiles attempting to appear. There's not a lot to hang on to and kind of step in large. You got Christmas trading. If you put a gun to your head and you have to trade, you might have to sit there. This is not a lot of leverage at this stage on either way with this particular product. And the Treasury market has back off into where the bottom of the profile had been before, or it had broken above and closed above before, and we've again explored the entire fair auction recently in about 2.5 days here. 126.23, we talked about having to wait for breakouts above there. That was a target on the initial move back up. I'm a big fan of not going short treasuries. If you watch this show, you know what I'm talking about. 126 is support on this. I think we could use that to drift back up higher on the treasuries. On gold, this is the February contract. Still not a fan of buying gold. Still looking for all reasons whatsoever to start to continue to sell this thing. You're sitting in no man's land right now on this one. There's not a lot of things to hang on to. Any breaks below 1060 are going to have to be sold on a closing basis, on a weekly basis. Day trading on gold, 60 and just not a big fan of stepping in with gold right now until we get around that 60 mark and get below there. The selling points up top again are around 1090. Silver, we're going to hit that really quick. This has been something that has been on everybody's radar screen in the den. We talked about taking off some weight yesterday at 14.43 and 44. That's because we hit those unfair highs on our daily, and we have to wait and see now. I'm not a big fan of buying this particular product until we show some break of trend relative to profiles, and that's not happening yet either. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I am looking at February natural gas. Let me save this page here. Okay, so the dark and gray clouds have left from the previous segment. I've been a little confused on the S&Ps. It's these 100-point moves, at least a 100-point move every day for 7 or 8 days in a row, and basically kind of being back in the same place it was at the beginning of all those moves. Those are without question interesting times when it comes to trading, but a lot of volatility, VIX being high, major inflection points being breached. It's just been a pain in the butt to me. And, I got skin in the game when I'm talking about all these things. So it's been a little frustrating for me. So let's move the dark and gray clouds out of the way. And playing the odds, playing more than one instrument, that's one of the hardest instruments to trade on the planet, by the way. So having a basket of the usual suspects and being able to, kind of play the probabilities on all of them all the time as we see them is ultimately the name of the game. So taking a look at natural gas. Got a hint of a new profile attempting to appear here on the February contract. And I know some of the guys in the den do trade natural gas. Tom was actually talking about it yesterday, getting back above 2. That's a new weekly profile attempting to appear. That's something that's interesting, because when we go down to the daily, we basically got up into, let me just pull this up for you. We basically, and I'm going to pull up in the scanner really, really quick. Where's it at? There it is. There's that new profile attempting to appear. That's kind of a target situation on the short side now that you've started developing into. That was as of yesterday. And then you'll see this top one. So, what do you do with this? It's been kind of bouncing around this morning. I'm going to pull up our multi-time frame situation. We're sitting around that 1.97 area. And let's just look at the other time frames here. So, excuse me. It's showing gray there, but I think we're right. Let me just check the last print here. Close, 1973. I mean, we're 0.3 above there. So, what do you do with this thing now? This action 2 days ago, close above, come back, and then we're sitting here. I think you got to be if you're bottom picking there. I think you got to be happy. I don't think you can be short right now with the weekly showing that new profile attempting to appear, and this kind of spinning after we had a spike up. I mean, you want to see this thing really come back down if you're short right now. If this thing consolidates and continues to spin up here, I think you got to look at this as a possible area of, like a launching pad situation where we may be able to move even higher. And, it's Christmas time. People are unwinding some things before the end of the year. There's a lot of that action going on. Be aware that this might not be a sea change event. It might be a trading opportunity on the very short term just to kind of get back above. So what do you do with it ultimately? I talked about a no trade a lot today already, but this one right here, we just have to wait, and we have to kind of get a close again above this 197 area. And if we start diving back down into the profile, I think you still do nothing, because that weekly new box attempting to appear, new profile attempting to appear is a very, very, it's a very big event when that happens on the weekly. And as you can see, we've had one the week of November, and we're having one attempt to appear now. We had one, let's just see. Okay, here we go. Last time we had one of those, so we've had April, November, and now we're having one again. So these are significant things that are going on right now. All right. Okay, let's take a look at the XLY. This is something I've been paying attention to. Here's the the latest support on it, 77.67. I really love how this thing's acting. This is our daily. I'd love to see this thing consolidate around here. I mean, we've kind of been short some institutional guys that I consult with from 80.5 up into 81.5, kind of digging in that area. This has been a decent little trade, and if this thing spins around again down here, it's a market's been kind of drifting up, as you know. I'm going to be a big seller on breakdowns below 77.67 on the XLY. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Had 2 good questions in the den. Let's talk about them. On the euro, let's talk about this first, Russ. We always talk about the usual suspects on the commodities, the indices. You guys throw out questions. I will miss things, and a lot of these things are very, very appropriate to talk about pre-market. Let's hit the Australian dollar really quick before we hit the euro, though. This is, I still love this trade. Staying above 71.60, 69.70. I still think this thing's going to reach up to 74.40. Don't get caught with your pants down on this one, though. Put the stops continuously, always on the other side of those ideas, if you will. And I like, this is what I really like. I like how this profile appeared below price action. And I like how we're coming down to kind of meet this and play around with it again. You're going to have some noise here. That's a really decent little indication in itself based on our algorithm. But, we've kind of got back above 71.69, 71.92 into 72. I like how it's pulling back to retest this. I'm, decent fan of how this Australian dollar is really holding up. Euro, this is the deal. We kind of poked our head below 109. This has been a little frustrating to me. This profile appearing below is relatively bullish on this product. It's holding in there after that ECB announcement. And, what do you do with it now? I'm still a big fan of we had a weekly close last week. We went back and retested. I got clipped on this one a little bit. No big deal. I've been taking some small little hits lately, but I'm glad to get them out of the way, to be honest with you. I've had a decent run lately, but we've got to just wait now until we get a weekly close again below 109. If that happens, I think easily we could start looking at this to revisit 107. There's the top of the profile in the daily. A lot of times these act as magnets, and I thought that was going to be the case last week. And I didn't take off any weight there when we got below, and I had to get stopped out. I mean, I'm not going to give this a massive amount of room, but around these, Russ, was that you that asked this question? Yeah, Russ, on the weeklies, playing the inflection points on the weekly, you just have to give yourself a little room. But I don't want this thing to run away. We got up into that POC, the top of the. Remember, this POC is the most voluminous print in the profile. It's the mode, and it's the top of the hill. And in wide profiles, you've got to pay attention to that. And I don't consider this really a super wide profile, but it's acting as the top of the hill that it can't really get over. It's making me feel good about this, but I'm just going to wait for some confirmations to get back below 109. I think you got plenty of downside room in this if that happens. So that's the way I'm looking at it. Yes. Okay. So good morning, JB. Can you look at the Navigator and CME Canadian and Australian dollar? Also, is the Navigator going to be on the new chart patch? Yes. So what we're doing first, to go back to the scanner here, as you can see, I'll hit cotton really quick. Prices are, price charts are in here. It's super mega easy for us to build on this. And if Sean's watching this show, we've got an entire charting package that we wanted to finish this, tweak the charting package that's outside of the scanner, and be able to roll it all out. And getting the information in here and, Christmas time and all that, we wanted to take the time to get this as right as rain before we released it. And, we've actually had some historical data issues. We want to make sure everything's right. And we actually shut down the scanner yesterday afternoon for about 2 hours on the futures side to, not that it affected the breadth or anything else, but we're trying to get as much work done as we can. And to answer your question, it's very, very easy to access anything in our database and print it on these charts within the scanner. So the Navigator is easily done. We wanted to make sure we just got our charts written properly, the prices, the dates, the levels, if you will. And I think we're accomplishing that now, but we can do upgrades constantly, add new indicators, and I think that Navigator is something very, very appropriate to have available while you're looking at a chart. But that's not going to be in this release, but it'll be in something that probably happens second week in January at the latest on that. We want to get this version out first so everybody can have charts. Here's the S&P. There's the 4 hour. There's the weekly. These are see, I just had a little crash there. Those are the things we want to clean up before we release it. This version. This is 4.3. And let me see here. Let me get this started again. When you write software, you can't ever really test it enough. And when you write code for new features, it seems to affect and attach itself to things that you've written in the past that are already in the program, and then you've got to do a lot of bug fixing, to be honest with you. And that's what we are doing right now, just to make sure you guys don't have any issues. We want to have all the issues, not you. Let's see here. And I'm changing my name to JL. I think it's a good idea because it just kind of cleans the slate on Google and a lot of other places. I'm just joking. Let's see here. The Japanese yen. I kind of think that's a no trade right now. The worm is turned on that for the most part, and I'm not a big fan of stepping in. Let's just take a look at it. Still below profiles on our weekly. Let's just take a look at this really, really quick on the charts. We can't access it on this chart, but just want to get these right first. Let's go into the yen here. Let's take a look at it. Here's a long term, as the scanner has talked about. I'm not a huge fan of getting long this in a big way until we get back above 122.5. We talked about that. That's really breaching our weekly unfair low and our daily unfair high. And I know we did that the other day. And again, this has been chopped up city for me past couple of weeks on some products, and this is one of them. Just a shame how that happened that way, but that's trading. Canadian dollar. And I want to reference the dollar really quick first. This is a really, really cool setup in my opinion. You've kind of got back up above 98. We talked about the retest will be the very cool trade on this one. We've done that this past week around 98.04. We've reached a low this week of 98.01, rounded off. So that's kind of cool how that worked out. And we're also starting to look like close above, come back and retest and move higher. So I think the dollar is sitting in a good spot here on the north side to take advantage of something. And you know where to put your stops based on your appetite for risk, based around 98. Let me see here. Yeah, Terry. I think we sent a message out for this. We were just shutting down the futures side. Just not that it affected the breadth. Remember, the breadth is based on the internals in the scanner. So when I go over here to all these odometers in our global grid, this has nothing to do with the futures. Where am I at here? Well, all these numbers are calculated based off the internals, the S&P 500 internal stocks. So we shut down the futures for a little bit yesterday, and we were trying to load more data, and we're trying to get that done while the programmers are available, and we sent a message out for that, and it should have popped up in here. I saw it pop up, but I apologize if you guys didn't get that. It didn't affect anything except for the futures for about an hour or two there. All right, okay. Go back and look at something here. All right, here we go. All right, so what I want to do is, in a market like this that's just kind of lurched higher very, very quickly. Let's go back to the Canadian dollar. I didn't finish that. Let me go back to it. Again, this is something. Here's a long-term, no new profiles attempting to appear. The dollar possibly sitting on the launching pad to move higher. The cool thing is also on this component, this Forex product pair with the dollar, the Canadian dollar, we've got a new profile that's appeared below price action on our intermediate. That's pretty strong. And with the dollar sitting on, in my opinion, in an area that could cause it to get increase in value, the Canadian dollar acting accordingly, possibly to move higher, this is a really, really good sign. So how do you trade this? You're looking for inflection points to move higher. I know we've got a short-term 240 bar 240 profile attempting to appear on this, but in my opinion, you've got it. I mean, this product, remember, it's going sideways when the dollar gets devalued, and when the dollar gets stronger, it gets worse. It goes higher. This is an inverse relationship most of the time, but this particular product, in my opinion, is going to head a lot higher, believe it or not. It's a runaway freight train, that the gift that keeps on giving here. All right, so I'm on my wrong screen. Here we go. Here's my real-time futures. All righty, so we're going to take a look at the DAX. Not for the faint of heart, this product. This is our daily. This is what we have information on. 10,560 is a support area for this right now. Do I think the S&Ps have a lot of direction? We've already talked about that. No. End of the year trading, this is going to be even thinner than it normally is. So how do you trade this now? It looks relatively supportish, if that's a word. 1060 10,631 is short-term support on this, as you can see. In my opinion, if we can get back down below there, we could revisit 10,560. Why do I say that? Because I think that the S&Ps are still going to be relatively non-directional to a drift up. And I think the DAX could have some more relaxing moments and just settle back. But I don't want to even think about that till we get below 10,631. These are very short-term views here because I don't think you should take any long-term stances from now until the end of the year. Okay. Whew. Shanghai. We've talked about not really trading this from the short side at all. Here's the reasons. Weeklies, no new balanced areas. Here's the daily. We've had a decent breakout, consolidate above these profiles to move higher. 35.53. That's a big number. These are all appetizing things for the U.S. stock market in general. Let's take a look at the Nikkei really quick. This is the March contract. Again, 18,828. Keep your eye on that one on the support on the Nikkei. And we're going to take a look at the XLF. This is really, I hate to say the word interesting. This is with rates being raised and the dovish comments that really came out after that. I think these banks in general have kind of gotten the wind taken out of their sails. They were expecting a little bit more, and the J.P. Morgans and the Bank of Americas, I thought they were some of the best trades on the books. It hasn't been painful to be long these things, but it hasn't exactly acted as well as people expected based on rate hikes and the yield curve widening. So what do you do with these things now? I think you got to wait on these bank stocks. I think the XLF is showing itself to be relatively confused right now. I don't think you should short against this 24 area. I had a couple emails about this. A lot of people have banking stocks in their portfolios right now. This is relatively depressing for guys that are out there that were banking on this thing continuing to move higher and consolidate and using 24 as a launching pad to move higher. This is kind of a wait and see now, and I don't think you've got a lot of leverage piling into bank stocks right now because bonds are sitting there not wanting to go down with the notes. They may not raise another quarter point for another 6 months. You never know. And that's not very appealing to the Bank of Americas of the world and the J.P. Morgans of the world. All right, when we come back, I'm going to hit a couple of things in the scanner. This is, when we have rallies like this that have happened pretty violently, you want to try to find things that are not cooperating or things that are rallying up into inflection points at best from being in a downtrend. So we're going to look at downtrend resistance, and there's some decent trades on the board here. Ford Motor Company, one of them. A couple other ones that we're going to hit in the last 5 minutes.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. So in times like this, you've had a nice run up in the market in general, past 24, 48 hours or whatever it's been. Pretty violent. It's a great time to kind of see who's popping their head up, but barely or even more so, but just getting back up into some inflection points to whack their heads off again that have been in a defined downtrend. So I put in this custom sort called downtrend resistance. And basically, it's going to find instruments that are coming up from the bottom up into inflection points that you can pay attention to. I was looking at the where is it? The ICE. Where is that? ICE. Here we go. So, we look at this. Here's where we're at. We're coming back up into these inflection points. 251. We've got a POC on the daily 250, 250 and a half. I'm just going to show this on the chart really quick. So what it's telling you is, okay, we've kind of rallied back up into the bottom of a profile on the weekly. That's that 251. Here's the daily, getting back up into the POC. This is more than likely a resistance area with stops above on something like that. Similar situation, Dollar General is on the list. This is, again, stock kind of been in a downtrend here, coming back up into the top of the balanced area on the rallies up in the market. 72.69 sitting there, and also kind of cool because you got two profiles, unfair highs on both of them. This is a little bit more of a scarier trade, but we've gone a long way in Dollar General. We've got these multi-time frame confluence situations going on. This is kind of crowding this area. Well, again, a little bit more of a scarier trade than some of the other ones that are obviously the oil stocks. There was one on here. Where is it at? Well, Level 3 Communications. Let's see. Oh yeah, Southwestern Energy Corp, SWN. And I'm just looking for ones with a lot of numbers on the daily or weekly here to let's just show you this one. SWN. This is one. Man, has this thing got? Oh my God. No new profiles attempting to appear on the weekly here. That's in the scanner, but I just want to show you visually, and you'll be able to get all this in the charting package. I won't even have to go back to eSignal, but we're coming back up into the top of a profile, putting it on your radar screen and saying, you know what, continue to sell the downtrend, but it closes above $6 on this. This is something I'd want to actually, 592 is the top of the box here. Closes above here. Actually could put this on my radar screen for a break of the trend down. So this is one to keep your eye on. If we start showing any closes on a daily above 6, I think this is actually something that, could be played around with, considering crude oil is maybe got a little bit more to go here. A lot of these stocks are just in such a mega uphill battle. They're accumulating massive amounts of losses. And how long is it going to take to man, it's a sad situation for all energy stocks, but this one in particular was kind of on my radar screen relative to the scanner. Let's see here. All right, so a couple other ones. Let's see here. I want to find some numbers that are higher on the weekly that are rallying back up into. So we took a look at Dollar General. Let's take a look at this one. Comcast Corp, CMCSA. Oh man, we're out of time. I didn't even see the clock. Guys, stay tuned for Larry. You've been great. And we'll pick it back up again tomorrow, believe it or not, Christmas Eve. We'll be back, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.